Alright traders, I'm back again with another video, and today I just want to go over some pairs that I'm looking at, look at some possibilities that may be on the horizon. We're going to start off here with the euro dollar, everybody's favorite pair, not my favorite pair, but we're on the 4 hour time frame here. So just take notice that this red line here, this red dashed line is going to be the previous month high. This is the previous month high, and this dotted red line is the previous week high. So that's the past week's high, that's the past month's high. Now you see where before you see this long candle here, which was a news day that bring this candle up through that previous month high. But before that we were sitting below there, and the market was steadily rising, slowly stepping up. And then we had that news day busted out of there, and then finally we came back and found support at the previous month high, and that's where we are finding now. So what it looks like, we're in a range here. Looks like you can see the level for the previous month high and the previous week high pretty much ranging in that level there. So you see we're in that range, really no trading right now as far as the Ichimoku system. Now if I wanted to take a support and resistance trade off of the bounce off of the previous week high, previous month high, I could take that, or the bounce off of the previous week high. You take that short, you could take this long. Now what we're going to wait for to see what price does. If price can break this previous month high, then it looks like we may be in for a nice trade here, because I'm looking for us to break through this previous month high, because you got your TK crossover, which is bearish, and you got Chico span below price, but still you have your Kumo future is still bullish, and you still have price really above the cloud. Well, now it's inside the cloud, so really inside the cloud we're not trading. When you're inside the cloud, it's pretty much telling you're in a range, and that's what we are. We're in a range, and you need Chico span to get outside of that price range. So you see we're in that range here. As long as Chico span is inside the range here, we really don't want to trade the Ichimoku system. We're going to look for something maybe off of the bounce of support and resistance. So that's how you would trade that. But here we'll wait for price to break this level. Now what we'll look for, if price breaks this level, we'll attack the bottom of the Kumo here, and if we violate that level, maybe price does a couple of things that you'll look for. So if we break this level, we'll look for a retrace back to maybe the bottom of the bottom of the Kumo, or maybe quite possibly the bottom of the previous month high. So those are going to be the two levels if we break out of there. Now when we break out, aggressive traders can take a trade here, put your stop loss a little bit above this previous month high, so you'll have that break here in the previous month high. Now if not, we're going to get the bounce here and we're going to go higher, but we're not going to look for a break of this level right yet. So if we bounce off of here and you catch that bounce, so if you see the bounce and maybe you break the Kumo, you could take a trade long and look for this level to be your target level. And if that's going to be your target level, you'll put your stop loss a little below this level. So you'll take the break of the Kumo cloud. So price comes down, bounces off of this previous month high support level, goes back up, breaks the cloud. You have your stop loss here, and you take the play of this cloud up to this level right here. So you'll be in that range. You'll be trading the range. Now we want to get outside of that range. We're going to look for the levels to be broken in this level. Once we break this previous month high, then look for us to probably more than likely break the bottom of this Kumo here, and then look for the retrace, and then maybe enter again. You can enter on the retrace. Like I said, aggressive traders can take the break right away, put your stop loss a little above that level, the previous month high. Alright, so right now I think we're going to range for a little bit. You need a couple other signals. You need your Kumo cross, you need your Kumo twist to become bearish before you look for anything short. So right now you could see the volatility, how wide the Kumo is. So pretty much volatility, you're in a range, pretty much it's showing us, and that's what we're in. So you could play it two ways. You could bounce off of the bottom here, bounce off to the top, wait for the break of this level, and then break the cloud, and then take it short, and then we'll take it step by step. We'll look for our levels that we want to go to, and this will be one level, because this is going to be your previous week low. So this is going to be your support level here, and then finally your previous month low. Now that's long term here. So we just want to first see if we can break this cloud, and if not, we're going to play the range. And then the final thing will be if we break the cloud, I mean, if we bounce off of the range here and then we break the top of the range, all right, so that would be something else to look for. But immediately, I think we're going to stay in a range, so I would play the bounce off of this level, break, take that trade, and take that high. Play your stop loss down here a little bit below. So that's what I'm looking at the euro dollar. I think we'll be in a range for a little bit though, so I'm not really messing with the euro dollar. I don't mess with it that much anyway, so I'll leave that up to you guys. Let's go to the New Zealand dollar, US dollar, 4 hour time frame. We're in this cloud right here, so right now there's no trading here. You got all bullish signals except for the price being inside the cloud, so we're pretty bullish here, and it looks like price is honoring this level here of the Kijinsen. So we're bouncing off of the bottom of the Kijinsen a couple times here. So I'm looking for maybe price to come outside of this cloud. Once we get outside of the cloud, break low below the cloud here, then we could take the trade. Okay, we can take a short trade, and now we have support here because this is also right here is going to be the that previous month high again. So it's going to be a support level here, and we're going to have to see what happens there. So a break of the cloud would maybe get you to this level, and that's going to be debatable if you want to even take that trade. So you may wait and see if price bounces off of that level, retraces, and then maybe attacks it again and violates it. So this is going to be a level that you want to violate for sure before you probably get into a long-term trade. Now if you break this cloud here, you could take a short trade depending on how far you break the cloud. I mean, you break the cloud way down here and your candle closes down here, no need taking a short trade there. I mean, unless you're a little scalper, if you're scalping a little bit. But I'm looking for longer term trades. Okay, so we want to see, I'm not getting too much of a definite uh, signals of what this price wants to do right now. We're sitting inside this cloud. We got all bullish, bearish signals because we got a TK crossover here that is bearish. It's a weak signal up above the cloud. We're inside the cloud, so that's a medium strength. That's no signal, medium strength signal. So it's neither bullish or bearish. It's ranging. You got your Kumo twist here, which is going to be bullish. I mean, sorry, bearish. That's a bearish twist right there. And Chiku span below price is bearish. Okay, but we need to get below this level here. You can see this fractal level. I like to get below these fractal levels. We break this fractal level, it would also break the cloud. But then we have to worry about this level here. And it's a level to take note of because it's the previous month's high. So I'm sure you'll find support at that level. So you want to make sure you get through that level too. All right. Now on the upside, we'll break the you break the Kijinsen right here, and if you break the Kijinsen, you get through the cloud. And once you get through the cloud, you look at this level here. Now I wouldn't take a myself. I'm not going to take a trade, a break of the cloud here. And really, you wouldn't even be able to take a break of the cloud because look where Kijinsen is. I mean, look where your Chiku span is. It's below the price. So you need, in order for that to happen, you'd have to come out in this area somewhere, and Chiku span have to get up here. Then you can take a break of above the cloud. That's where we'll be looking for long. All of our signals are telling us short right now, so we're looking for the short-term trade. I mean the short trade. So it's going to be below this cloud. But most definitely, you want to get below this level here. So I don't know what I would do with this pair here. I'd wait this out and see what happens when we get to this level, if that happens. If not, we'll wait till we get up here and then see what happens at that level. So pretty much the New Zealand dollar, US dollar for me is a neutral pair right now. Nothing for me to really look at. Now we're at the Aussie dollar 4 hour time frame. Again, this is all pretty bearish. You got a TK crossover here, bearish, and you got your Kumo twist here, bearish. You got Chiku span below price, and it's bearish, and you got price below the cloud, so that's bearish. Everything is bearish here, and it looks like you could take a short trade on the break of this fractal level here. You want to get below this fractal level here, then you're going to be aware of this again. This is going to be your previous month high. You want to be aware of that level. We need to make sure we get through that level, but we can take a trade, a break below this level here, and take that trade to this level and then see what happens. So we break the fractal level here, this support level, and then we ride that to this level. You put your stop loss a little bit above the Kumo here because your flat bottom Kumo is going to hold as resistance right now since price is below there. So that would be your resistance. If you want to be even safer, you put it up at the Kijinsen, but I think pretty safe putting it at the Kumo here. You got that flat bottom. Okay, so all your signals here are bearish, and it's just a matter of breaking this level. Don't let price fake you and fade back on you, because this level may hold and price may bounce around here, then drop, or bounce around and go back above the cloud and attack this level again. So just wait till you see what happens. You get a close below this fractal level, and then you're safer. You can put your stop loss up here. All right, so we'll wait on that, see what happens there. Um, Aussie yen 4 hour time frame. Again, this is looking just like the other charts. It's all bullish. You got TK crossover, that's just bullish. Your future is bullish. Kumo twist right there. You got Chico span below price coming through the cloud. We need Chico span to get below that cloud. That'd be a nice trade. But then again, we want to break these fractal levels. So basically, this fractal level here, you can see the support that it is. Let's put that there. You can see where this fractal level is holding as support throughout. Okay, we'll drop it even lower where it's even more relevant right here. You can see where we pretty much came up close there, missed it just a little bit, but came here and rested on there for a few bars and then broke there. Once we broke there, we came back on that level, sat there a couple times, moved away, sat on it again, then moved away, and now we're attacking that level again. So now when we get to that level, do we expect to break that level right away? So if we get a break of the cloud, well, actually not a break of the cloud, sorry, a break of this fractal level, we're so close to this support level, which is the fractal level almost, because you got this zone. It's pretty much a zone right here, and that zone would be from here to there. So we kind of want to get through that level, I believe, because I think if we hit this level, it's a good possibility that we could range. We can bounce off of this level and go back up. So you kind of want to get below this level, and then maybe attack this previous month's high again. That would be your level for your profit target. Like I said, everything here is bearish, but also, like I said, you're so close to support that you need to really break that level. And if you want to be safe, you break it and wait till you retrace back to it and then take a trade. What happens a lot of times that'll frustrate you is that you take this trade on the support level, the break of it, or even the bounce of it, and a lot of times price goes lower and then it leaves you a long wick, comes back up, then breaks back down, and it whipsaws you around in that area. So just wait for that break, and you can put your stop loss above the previous candle that breaks that level. All right. A lot of times I notice if price is going to go, it'll go. So you can put it above that previous candle, and if price is going, it'll go. If not, then it'll come back and take you out, and you know that it's really not ready to break that level yet. So we want to really get through this level. This would have been a nice trade off of the bounce here, bounce off the Kijinsen. You can see where the Kijinsen is holding as resistance. Hit it 1, 2, 3, 4, 5 times, 6 times, and you could have taken that bounce right here and then taken that, put your stop loss a little above the cloud here. You got that flat bottom again, so that would have been your resistance level, and you'd have been tight here. But we want to see maybe price may range now. So we have a attack right here where we honored that level. We're pretty close coming back again. We may honor that level, and just depending on how far up we go back up again. All right, because it looks like we made a support level here, a resistance level here, but you also have your previous week high. So we're in between that level right now, the previous week and the previous week high and low. We're in between that level right now. All right, so like I said, this is all bearish, looking for that. Would have been really nice to get this, but that's not one that we got, so we'll wait on the other signals. So let's go to Euro Aussie 4 hour time frame, and here we are. This could be a good trade eventually if it breaks out of here. We need it to get above this level. Now this is a little zone here. You don't get fooled out here, and this zone was really going to be the level that you're going to be concerned about. I really think you want to get above this level, because when you get above this level, you can see there's still price action up here, and you have these wicks. There's a wick here, this wick here, and then inside here, I call this the zone because there was some action inside that zone, and at the bottom of that zone was a resistance level. Basically, you could see some closes at the bottom of that level. So that's why I make it a zone, because I put the wick here, and then you got your closes down here. All right, so I got a few closes down here, I got it closed down here. So price came up, busted through here, faked you out here, and faded back down. Probably took some traders stop losses and took them for a ride here who thought they were going to go long here. And I would have thought that too with this here, but I would have kept a tight stop loss because you get faded out a lot of times at support and resistance levels, even on the Kumo cloud. So, and then price came all the way back down and attacked this level again, and it honored this level for a while here and then dropped down. Now we're coming back to this level. All right, so do we expect to break that level? If not, we're gonna fall back in that range here and drop back down. Now the thing is, we need Chiku span to get outside of this range here that we're in, and that range basically is getting above this at least this green line here. Now this dotted green line, this dashed green line, is the previous month's low. All right, so we're below the previous month's low, and you see where we came down. We're below that level. We need price to get above that level and break through this zone here. Now, if not, we're going to bounce off of the bottom of this level here and the previous month's low and continue back down here to this level. This is your support level down here. You can see where it is. I put another zone. If I put a line here and then this level here, it would be another little zone that you could look at. And price has been inside that level for a while. So once we break out of this level, the longer we range in a level, the more powerful the move is. Once it goes, more than likely. All right, usually that's the case, but it's nothing's definite with trading. Nothing's always. All right, so that's what we're looking at here. We got all bullish signals, but it looks like we're getting crisscrosses a lot. So even this bullish signal doesn't mean much to me until we get above this level here, because you got a bullish crossover, but you can see where it's crossed over a few times. All right, so Chiku span's inside that range. It doesn't really help us being inside that range, and price is above the cloud, which is bullish, but we still want to get above this support and resistance level. And you got a Kumo twist here that's bullish, so everything's looking bullish, but we just need to get above this level. All right, so you see that level there. All right, that's the Euro Aussie 4 hour time frame. I wouldn't look for anything short unless I'm playing the bounce of the range. So the range would be the bounce of this level here and take it back down to this level. All right, so then you're not really trading the Ichimoku system. You're trading this range off of support and resistance levels. Now that once we see the break of this level, maybe we break that level and retrace back. So if you want to, aggressive traders will take this break and take it right off the bat and put your stop loss a little below that candle. Like I said, if it's going to go, it's going to go. You could put your stop loss below the candle and you'll be safe, because if it's going to go, it's going to go. If not, it's going to come back and fade again. But once it goes, it could retrace back to that level again and then go again. So you always look for the retrace if you miss that level. All right, so that's the Euro Aussie 4 hour time frame. This is the New Zealand dollar yen 4 hour time frame. Again, looks just like the other charts pretty much. Everything's looking pretty bearish lately on these charts. You know, we moved up, we're at the top of the cloud. We made our peak level here, and now we're bouncing down, and price could range in this level. But now it looks like this would have been a really nice trade to take the bounce of this Kijinsen here, because you're at the bottom of this flat Kumo bottom here, which would have been support, well, rather resistance for you, and you can see we bounced off of that level and we're moving down. Now I have this zone here, which was a daily time frame support and resistance level, and you can see all the action around there. Nothing definite, and this is where you get whipsawed a lot trying to get into a trade here off of a support and resistance. And then you got a bounce here and price moved up a little, and now what's going to happen? We need to get below this level again. All right, get below that level and we can ride it to this level and see if we break that level. These red dash lines are going to be previous month's high, previous month's low right here. This previous week's high, previous week's low. So we're in between the previous week high and low again. All right, so you got all bullish, all bearish signals. You got a TK crossover up here that's bearish. Chico spans below price, price is below the cloud, and you got your Kumo twist. So that's why I say this would have been a nice trade right here, because you wouldn't have had much to risk. You know, you could put your stop loss a little above this fractal level here, and you wouldn't have been risking much. You would have been entering right here, and still it's early yet. You want to wait and see what this candle is going to do. But a lot of times you want to wait, you see Kijinsen and Tenkan-sen coming together like this, and they can cross, and then price is going to go back up the other way. So let's wait on this. I like to get below the fractal levels myself before I get into a trade, but this would have been a really nice one here. But since not, we'll wait and break this fractal level. Now we don't have much room again. We're close to this support level here, but taking this level wouldn't be too bad of a trade. We could take that and maybe put our stop loss a little above this fractus level here. But you guys probably don't have this support and resistance level here, so pretty much the top of it is what, 81.44, and the bottom is 80.98. Okay, so that's the zone area, and if we get below what's it, 80.98, we get below that level where the fractal level is, we can take that short to this level here. This is going to be a previous week's high. I mean previous month's high, sorry. And that's going to be what's that sitting at? That's sitting at about 79.884. That's where that level is. So break that level and we could see this drop all the way down to this level. But that's long term, so we don't know what the market's going to do long term. We don't even know what it's going to do short term, but we try to figure it out. All right, so let's go to the dollar CAD. Now this is the one that's looking a little bit bullish. You know, we got a TK crossover here. Price came down. Got your TK crossover. Price broke up above the cloud, and so that's a bullish signal. So we're looking long now. You're getting a lot of volatility here. You could see that, and here it is right here, and you see that with the wide Kumo here. Now we need the bottom of this Kumo here to angulate up along with this one, and then price will be going right up for us. So you'll have your single span A and B both rising upwards, and we want to see that to get into a long trade. Now you can see this long wick candle. This is faking people out again. You get faked out by thinking you're getting a break of this fractal level when it pulls all the way back. But now we got a TK crossover, which is bullish. You got a bullish cloud future, and you got Chiku span still below the Kumo, which isn't major yet, but the Kumo is going to act as resistance for us, so we could range in this area a little while till Kumo gets on the other side of the cloud. Now once Kumo gets on the other side of the cloud, you'll feel safer because you won't have anything inhibiting the Kumo and to inhibit your trade long. So basically, probably to feel safe, you want to get above this level. This is your previous week's high. We probably want to break that level to feel even safer. Now playing off of the bounce of the Kijins in here, you could keep a tight stop loss. But you can see price is doing nothing but all over the place, so this wouldn't even be a pretty safe trade. You risking nothing really, but you got an opportunity to take it long, I guess. But I want to break this level here, this top of this level here. Once we break this level here, then we could look for the long trade. Now I'm not looking for anything short until we break this level, get below this previous week's this previous month's low. So we get below that previous month's low, and then we could see a short opportunity here down to this level. All right, so one more thing we're going to look at here is going to be the euro pound. And the euro pound, you could see this is pretty much looks like it's a bearish market here, but not really a lot telling us because we just got outside of the cloud. Price came above the cloud, bounced off of the cloud. Now we went below the cloud. I think we could play a break here below this cloud. This closes below the cloud. We can play it to this level down here. So you got a TK crossover, which is bearish. Kumo's below. Chiku span's below the price, but it's inside the Kumo. But we're below the Kumo with price. So this is looking a little bit bearish, and it may ride down to this level. May range in here. This is going to be the level that we're right at, and price will sit down here maybe. So if you take this trade, you see this resistance level right here, and at this resistance level we can expect that level to hold maybe, and take a trade here when this candle closes. We want to see what this candle closes. If it closes below this cloud like it is, it may be a good opportunity to take this short for maybe, within this range area here. And that's what I'm looking at. You got the TK crossover, like I said, but then again, you got to wait for your future to turn bearish again. You got a bullish future right now, but you got that flat bottom. All right, so that's going to be resistance, and you'll get that if price drops. You'll get the crossover because you got everything else. You got your TK crossover, and you got your Chiku span below price. And Chiku span get outside of that cloud here again, nothing to inhibit us and take us down to this level. All right, so that's what we're looking at for now, and hopefully you guys enjoyed that, and we'll be back with something more once the market does something. The market's doing nothing really lately, so all right, traders, until next time, God bless. So long.